Hello and welcome to the status report overview of our funds in March. Let's start by taking a look at the performance of our equity funds. SKAGEN Global is closing in on its benchmark and is now lagging the index by 1.3% year to date. In March, both SKAGEN Kon-Tiki and SKAGEN Global underperformed their respective indexes. If we look at the broader equity market performance, China, Denmark and Hungary were among the top performing markets, while Brazil, Turkey and the United Kingdom were among the bottom performers. In March, the European Central Bank launched their €1 trillion quantitative easing program, driving a rally in European equities, which returned 17%. And in the US, the Federal Reserve's much-anticipated rate hike did not materialize. Nevertheless, recent US economic data has been weaker than expected, dialing back consensus expectations for when the first rate hike will be announced. The appreciation of the US dollar continued. Next, the main drivers of the fund's performance during the month. For SKAGEN Global, Samsung Electronics and Roche were the best monthly contributors to absolute performance. AIG also continues to develop in the right direction and was also to be found in the top contributors. State Bank of India figures were somewhat weak in March, underperforming the Indian bank index. The upcoming partial sale of the government stake has caused overhang in the stock. SBI was therefore among the three main detractors, together with Banrizul and China Unicom. For SKAGEN Kon-Tiki, the Chinese auto manufacturer Great Wall Motor was once again the top contributor. The company released quite good February figures and confirmed the relaunch of its urban higher-end SUV. The new model will go on sale nationwide at the end of April. Samsung Electronics also contributed well as its most recent limited introduction of the S6 phone garnered praise from the technology community. At the bottom of the list, we find Vale, State Bank of India and Banrizul. Vale has been under pressure from continued macro headwinds in Brazil and the lower iron ore price. Now, let's move on to some of the portfolio activity during March. SKAGEN Global initiated a new position in the Danish beer company Carlsberg, which has delivered only 3% total shareholder return annually versus 20% for the two largest peers over the past 7 years. The situation in Ukraine has further shaken market confidence given Carlsberg's substantial exposure to the Russian consumer. However, we argue the market has overlooked the fact that after all the earnings downgrades, Russia will comprise 20 rather than 40% of earnings on depressed demand, a weak ruble and low utilization rates. Furthermore, we picked up some exposure in one of our main contributors in March, the Swiss pharma company Roche, which has been lagging the market. We see this as a temporary weakness. During the month, we reduced our holdings in Global Mediacom, Technip and Philips after strong performance. We exited our positions in Renault, which has returned nearly 40% in local currency year to date, and Yamaha Motor, which was one of the best relative performers in 2014. In SKAGEN Kon-Tiki, we added to our position in Sabanci following a recent meeting with the company, which confirmed our investment case. We also took advantage of the weakness in the Brazilian market and increased our positions in Banrizul and our new position CBD. On the sell side, SKAGEN Kon-Tiki exited OCENV and UIE as both stocks reached our price targets. Among others, we reduced our position in Kaiwoom Securities as the stock price reached our target. Those are the highlights for March. For more information, please remember to download our market report or visit the SKAGEN website. Thank you for watching.